1.4 billion people. That's the population Indian Prime Minister Narendra Modi just publicly asked to stop buying gold for an entire year. He stood at a rally in Secunderabad on May 10th and told the world's largest gold buying culture to put the wedding jewelry away, postpone the ceremonies, and cut down on the buying. And I've been fortunate enough to go to one of these weddings, and they are very extravagant with their gold. India's gold import bill just hit a record 72 billion for fiscal 2026, and the government is now openly trying to suppress demand for a culture that has been buying gold for over 5,000 years. Meanwhile, central banks bought 244 tons in Q1 2026 alone. That is the strongest first quarter on record. The citizens of the largest gold buying nation on earth are being told to stop, and the smartest sovereign capital on the planet is buying it as fast as the refineries can smelt the bars. I'm sure you guys can see the paradox here, but what actually worries me much more is the structural signal. Today I'll walk you through exactly what Modi said, why his own central bank is doing the opposite of what he is asking his citizens to do, why the Bank of France just pulled 129 tons out of the New York Fed, and where this fits inside the 18-year cycle. So hit the like button, subscribe to the channel, and if you want the full framework on the 18-year cycle, there's a free 3-part mini course. The link's at the top of the video description, but I'll tell you more about that in a minute. So let's get straight into the data. Let me start by giving a bit more context here. Modi did not just ask citizens to stop buying gold, he asked them to revive working from home, cut fuel consumption, reduce edible oil intake by 10%, and avoid non-essential foreign travel. It was basically him presenting a wartime austerity package. The trigger was the Iran war pushing crude oil from roughly $70 to $126 a barrel. It's a bit lower now, sitting around $100, but if you've been following this, you know we're always a couple of Trump tweets away from $150 or $50. Anyway, the Strait of Hormuz closed at the exact moment the country was already absorbing record gold levels. And here is the part that makes the gold ask unprecedented. India's import bill hit 72 billion in 2026, but the volume of gold imported actually fell from 757 tons in 2025 to 721 tons in 2026. Translation, India spent more money buying less gold because the price exploded. The average gold price India paid rose from roughly $76,000 per kilogram to $100,000 per kilogram in 2026. That's a 30% jump in a single fiscal year, and it gets sharper. In April 2026, Indian gold imports collapsed to approximately 15 metric tons. That's a near 30-year low. The Ministry of Commerce missed its bureaucratic deadline to publish a list of approved import banks, and the entire pipeline froze for 17 days. Domestic prices surged to a $20 per ounce premium above the international spot price. So before Modi even opened his mouth, the supply chain was already strangled and its citizens were paying record premiums to access whatever metal could still be sourced. That's the setup. A government begging its citizens to stop buying an asset that is already in critical short supply at the highest price in history. Now here's the rhetorical question forming in the comments. If gold is so stretched, why are central banks buying it like they are running out of time? Simple answer, because they are. So then why isn't the price of gold going up? The main reason we could find could be due to the wars. A brief side quest will explain all. Wars cost money and they can't be funded in gold. Countries that have gold are also fighting wars right now. Think Russia. They may be selling enough on the markets to fund their war, which is keeping the gold price relatively stable in a trading range for the last few months since the peak in January of this year. If I needed money to fund my projects and I had the commodity that's in demand, I'd sure as hell be selling as much as I could while prices were going crazy and euphoric at extreme levels. Now to those buying. Central banks bought 863 tons of gold in 2025, and that's the 16th consecutive year of net purchases. Q1 2026 alone delivered 244 tons globally, the strongest quarter on record. The World Gold Council confirms official institutions have purchased over 200 tons in 10 of the last 11 quarters. JP Morgan has now revised its 2026 forecast to 800 tons of central bank buying, and they explicitly modeled demand above 350 tons per quarter as a threshold required to push prices structurally higher. Q1 26 cleared that threshold by nearly 70%. China added gold reserves for 18 consecutive months as of April 2026. Poland is the largest single buyer of 2026 so far, targeting 700 tons total reserves to bolster security on NATO's eastern flank. Kazakhstan, Uzbekistan, Czech Republic, Malaysia, Guatemala, Cambodia, Indonesia, Serbia, and UAE all reported net purchases in Q1. But the most important name on this list is the one Modi is sitting on top of, the Reserve Bank of India. Since March 23, the RBI has repatriated approximately 274 tons of gold from foreign vaults back to Indian soil. In the second half of financial year 2026 alone, they brought home another 104 tons. the pace is accelerating. The share of India's gold reserves held domestically has moved from roughly 38% in March 23 to over 77% by March 26. And gold's share of Indians' total foreign exchange reserves climbed from 7.4% in September 23 to 16.7% by March 26. Modi is asking 1.4 billion citizens to stop buying gold while his own central bank is moving the country's bullion home from London and the New York Fed at the fastest pace in modern Indian history. That's the contradiction. And it gets worse when you look at what is happening in Paris. Between July 25 and January 26, the Banque de France quietly completed the repatriation of its final 129 tons of gold held at the Federal Reserve Bank of New York. But here's the genius bit. They didn't physically ship 129s of bullion across the Atlantic. They executed 26 staggered transactions selling older, non-standard bullion stored in New York at peak prices and simultaneously buying equivalent London good delivery bars in Europe to be stored in Paris. The net result was approximately 15 billion US dollars of capital gain booked on the operation. That single trade flipped the Bank of France, aka Banque de France, from a 7.7 billion euro loss in 24 to an 8 billion euro profit in 25. That is what professional gold management looks like. And don't forget, France is a NATO ally and a G7 founder. If America's closest European ally is pulling its bullion out of Manhattan and booking a $15 billion windfall on the way out, what do you think is going through the minds of every other central bank reviewing its custody arrangements right now? The Bundesbank is being publicly pressured by German politicians and taxpayer groups to repatriate its 1,200 tons still sitting in New York. That alone is 37% of Germany's entire gold reserve. The Netherlands already cut its New York Fed exposure from 51% to 31% back in 2014. And so the exodus has been quietly underway for over a decade. France just made it a flagship operation. So when Modi tells his Indian citizens to stop buying gold, ask yourself what the people who are actually in control are doing. The World Gold Council surveyed central banks this year. A record 95% expect their gold reserves to grow over the next 12 months. None plan to reduce holdings. None of them. But we all know we should do as they do and not as they say. So we'll keep watching the charts to see whether they're actually putting their money where their mouth is. Now let me show you what the so-called smart money on Wall Street is calling. This isn't to say they'll get it right, because we all know that they are usually a long way off accurate forecasts. But here is what they are telling their retail and institutional clients. JP Morgan says a target of 6,300 by year end, Wells Fargo 61 to 6,300, Deutsche Bank and UBP both 6,000, UBS 5,600, Goldman Sachs 5,400, and even Morgan Stanley, the most conservative out of the banks, is sitting at 5,200. Gold is currently trading around 4,700 today. It hit an all-time high of 5,600 on January 29th this year, so we're roughly 16% off the peak, sitting comfortably above the 43 to 4,400 level, which was an important peak last year. You remember when we saw lines of people at bullion dealers around the globe lining up to buy everything right before the price plunged 11% in 6 days? That was then. And here's a data point that nobody at CNBC wants to spell out. Gold has now outperformed the S&P 500 for 3 consecutive years. The Indian Nifty 50 is down 8% year to date in 26. Indian gold ETF assets under management ripped 190% higher year on year, hitting roughly $20 billion by March 2026. 2026 inflows into Indian gold ETFs alone more than doubled the combined total of 2021 through to 2025. I double checked that. I'll get my editor to put numbers up on the screen. They're basically insane. Could this be yet another contrarian signal, meaning to do the opposite in the short term? Obviously only time will tell, but I'll be tracking this every week for you on my chart analysis channel, Jason Pizzino. There's a link in the video description. Fiscal year 2026 Indian gold ETFs, net inflows over $7 billion. Fiscal year 21 through 25, net inflows roughly $3 billion. So even as Modi asks citizens to stop buying physical gold, citizens are routing into ETFs at the fastest pace in Indian financial history. The government is closing the front door and the population is sprinting through the back one. That is what structural demand pressure looks like when it cannot be politically suppressed. So the question is, why now? What changed? Well, to get an honest answer, we should probably go back to February 28th, 2022. That was the day when Western nations froze approximately $300 billion of Russia's foreign currency reserves, the largest confiscation of sovereign assets in modern financial history. It was executed by simply turning off Russia's access to SWIFT and freezing its accounts at Western central banks. You may have heard about that one before. The mechanism was 100% political, and every sovereign nation on earth got the same lesson that day. US dollar reserves are not unconditional property. They are conditionally held assets that can be frozen, seized, or weaponized by Western governments at any moment. Gold sitting in your own vault, in your own country, is the only major reserve asset that no foreign government can freeze. That is when the slogan, "If you don't hold it, you don't own it," stopped being a gold bug talking point and became official central bank doctrine. It reminds me a lot of Bitcoin's mantra, not your keys, not your crypto. Now, the dollar share of global reserves dropped below 57% in 2025. It's the lowest reading since 1995. Gold's share of global reserves climbed from roughly 13% in 2017 to around 30% in 2025. BRICS nations' share of global gold reserves moved from 11% in 2019 to 17% by 2025. The European Central Bank surveyed government reserve managers this year. Nearly 2/5 cited geopolitical risk as their primary motivation for holding gold. This is not a cyclical preference. This is an existential hedge against financial warfare. And Modi's appeal proves the demand pressure is permanent, because if it were not, his own RBI would not be repatriating 104 tons in 6 months. And here's how all this ties into the framework. If you've been following the channel, you know I've been tracking a few signals to confirm the 18-year cycle is rolling into the second half. The framework comes from Fred Harrison and Phil Anderson, sourced from over 220 years of US public land sale data, and the cycle has been forecasting this exact period as the winner's curse phase for over a decade. Signal 1 was the home builders rolling over in late 2024 and putting in lower highs ever since. It's yet to be confirmed, but it's not looking pretty. Signal 2 was the bond market repricing the Fed in a single week as rate cut probabilities collapsed. And this cycle, we see gold confirming as signal 3. 863 tons of central bank buying in 2025, 244 tons in Q1 2026 alone. A 95% central bank survey saying they expect to keep buying. The Bank of France booking $15 billion, pulling its bullion home. The RBI moving 274 tons back onto Indian soil. And the Prime Minister of the world's largest gold buying culture asking 1.4 billion people to stop because the structural pressure has overwhelmed the country's ability to absorb the import bill. What happens when demand skyrockets? Supply can't be expanded and every supply line is disrupted. I'll let you answer that one. If you want the full breakdown on how these 3 signals stack into the 18-year cycle, the 7 stages of the cycle, and exactly where we are right now in the timeline, the free 3-part mini course walks you through all of it. Part 1 is the cycle itself and the 220 years of data behind it. Part 2 is where we are sitting right now. And part 3 is how to position for what comes next. It's completely free. There's a link in the top of the video description. So long story short, the largest gold buying culture on the planet is being told to stop because the structural demand pressure has finally cracked the political ceiling. And every prior moment in monetary history where citizen demand and sovereign capital pointed in the opposite directions, the guys who control the printing press, the rates, and the reserve policy are the ones who set the price. And you need to be prepared. So after everything you've just heard about Modi's gold appeal, the RBI repatriation, the Bank of France windfall, and the central bank buying frenzy, where does this resolve? Does Indian demand actually slow under the political pressure, giving the Fed and the BOE one more window to delay repricing? Or does the structural demand pressure overwhelm Modi's appeal entirely, with ETF inflows replacing physical purchases and central banks pushing through the $6,300 target by year end? Drop your call in the comment section. I'll be reading every single one of them and replying to as many as I can. So thank you very much for your time. Put in your comments down below. Hit the like button, subscribe to the channel, and grab your free 18-year cycle mini course in the top of the video description. I'll see you guys in the next video. Until then, take care and peace out.